What is going on, Alpha Hunters? Hope everybody is having a terrific Tuesday. We are seeing some pretty good bullishness today. There's a look at the Qs. The reason why I have the Qs up here first is because, well, the Qs hit an all-time high this morning in the first 2 hours of the trading day. A little bit past the first hour, hit all-time high there. So, cool. Very cool. Kind of expected that right after yesterday's bullishness, after last week's bullishness, past 7 weeks of bullishness. Kind of expected it to hit it either today or maybe the first half of the day on Wednesday. Yeah, there you go. All time high right there on the Qs. And the SPY, though, not too far behind. SPY is actually outpacing the Qs today. A little bit of a gap up here on the SPY of about 0.1%. And then just kind of traded higher. Currently up, about 0.5%. Nice move on the day. I mean, we just kind of traded higher, just kind of gone sideways here the past couple hours. Looking pretty good there. Qs, yep, we just talked about the Qs, all-time highs. Pretty choppy day, though. Pretty choppy day. Not super strong, up about 1/3%, but that's about it. IWM, pretty strong day, up 1.7%. Very nice day. Look at that gap up run there in the first 30 minutes. Been pretty sideways since that time. This is that first early morning push. Okay, the DIA, look at the Dow Jones making some pretty good runs. A little bit of a gap up. Nice run here for the first 2 hours. A little bit of a pullback there in the third hour, and then it's been trending higher here for the past hour and a half. Looking pretty good on the DIA. RSP, also nice little gap up. A little bit of a trade higher. Most of it was there in that first like 20, 25 minutes. Nice trade. A little bit of a push higher, mostly sideways though, really since that first 20 minutes. So not a whole lot kind of going on here over the past couple hours across the markets. Okay, take a look at the daily pictures real quick. RSP not taking out last week's high. Had a pretty good pullback there Friday, Monday. Okay, not looking too bad. All right. DIA continuing higher, pushing into the all-time high areas. Look pretty good. Now, it's kind of weird that the DIA has kind of led this market into the all-time high area. This is not normal. Normal past bear market type behavior. You don't see the Dow Jones lead into the next bull market. So that is a little bit of a concerning thing, in my opinion. But it's okay. We can address that at a later time. IWM. We've seen very strong movement here off the IWM, off the lows that we hit in late October. Definitely mentioning you want to be a buyer down there. Now, the one thing I will say is I think the IWM probably has bottomed. Even if we get back down there, the downside will be so short. I mean, from that low that we had in late October to this low, this is a pre kind of pandemic kind of top spot. It'd be about 1% lower. So if we do see some bearish activity, and this is not going to be in 2023, it'll be in like 2024. You're going to want to be a buyer back down these areas, even lower, be very strong. I doubt we actually get down there. What I actually think will probably happen is we probably will be bearish, but we'll probably come down to some lower levels, but we won't break these lows. I think the Q's SPY probably would. I don't think the IWM would. And that would be one where you probably want to continue to be bullish on the IWM, as I think they have clearly bottomed, and we'll see a allocation of capital as we get into next year out of the big tech area. Speaking of that big tech, the Qs is what the day looks like here. Yep, taking out that all-time high today. So I'll leave that previous all-time high line kind of there for now. I can probably do away with this one. Not a really big deal, but yeah, I mean, just taking that out, it looks pretty cool. Finally getting back there, taking that out. And, some of those, Mag 7 or old school Fang stocks, whatever you want to call them, they've been leading throughout this year. So, you know, okay. I mean, it's kind of interesting. Some of those have already hit all time highs. They were hitting all time highs back in the summer, but we now get in the Qs, which is heavily weight dominated by those stocks, just now hitting those all time highs. Very cool to see the Qs, though, at the all time highs. SPY breaking that last week's high today. So continuing higher here on the SPY, has not gone to its all time high. Not getting far from it. Let me do this. Let me put that there. Let me bring up a monthly so I can just get the high spot in here. I'll put it there. High 479, 479.98. Let me change this. It's 479.98. All right, there we go. 479.98. 90. There we go. Okay, so we get there. Probably sometime soon. So that's kind of a real quick wrap up of the markets and kind of where we're at. The Qs, though, hitting all-time highs. Now, you see all these tabs up here. I'm going to go through this a little bit later in the live stream. So if you're actually watching the video version of this quick market rundown, you might want to check out another video I will post later on about all these different tabs. It's kind of what I think will probably be a pretty good storm kind of coming here in February, March. Until then, like especially through the end of this year, you're probably just gonna kind of just lean bullish. I mean, we're not going to get much data. We're going to get some data here at the end of the week. I think, Thursday, Friday, right? Yeah, Thursday we get GDP growth rate quarter over quarter. Don't expect anything crazy on that. And then, Friday we're going to get a slew of, I don't even know what that means. We're going to get a slew of data here. Core PCE, durable goods, personal income, personal spending. So we're going to get that at the end of the week. And that'll be the last data we get for the year, because after that, it's basically going to be holiday season, right? So we're not going to be getting any more data until we get to January. And January that'll be an interesting one. I think that'll be a very interesting one to kind of see how we kind of shake out there. So, I'll continue this rundown, but you want to see what I got to show off a little bit later. VIX, not really doing a whole lot. I mean, trading down. I mean, market's bullish. Makes sense. Not crazy dropping off, though. Not getting back below the lows that we were putting in last week. Okay. People being defensive. Let me check the PCC real quick. I don't really typically check this thing out. A little bit more calls in there. Okay. Definitely more calls over the past week, especially like last Thursday. A lot of calls in there. Okay. All right. Anyways, the DXY dropping down a little bit. Nothing crazy. Not getting below last week yet. Gold's not getting above last week's high. Popping a little bit today. Makes sense. Dollars down. All right. Inverse. Gotcha. 10-year yield. Ooh, look at this. Sideways stair step here. Look at this. So, he's getting real tight in there. Real tight. That's after 2 days. Man, I wouldn't have thought we'd have been that tight the past 3 days. That's an interesting one. Okay. 10-2 inversion, not really doing much. So the yields are all kind of moving together. HYG, nice bullish move here today. So far, it looks like it's consolidating here. I wouldn't want to take this on a breakout yet. I would, if it breaks out, you want to get it on the retest. I would want to see this consolidate a little bit longer before I would want to be taking it on a breakout. LQD, same kind of deal, kind of just resting. See how that goes later on. TLT hitting that same level again. Still the same thing I kind of mentioned with the HYG. I don't really want to take this on a breakout yet. I'd rather take it on a retest. And then take that higher. But maybe I would much rather want to see this consolidate much longer. Okay. Okay. Check sector rotation. What's kind of moving out there? Because kind of looks like big tech's lagging a bit today. Let me see here. Sector performance. All right. Yesterday, wackadoo. Underperformers for the day. Staples, utilities, and tech. Utilities just got sold down there the last 30 minutes. You can see the XLU dropping off there. Tech, yeah, definitely lagging behind there on the day. We'll see if we can find the culprit. You can see AAPL here is only up 0.1% on the day, so it's not like AAPL's helping. Healthcare outperforming on the day. Industrials, real estate, discretionaries, financials, materials, energies, and communications. XLC outperforming, the best outperformer on the day. If we take out the gap, what do we got? Energies. Look at that intraday performance. Energies looking pretty good. Financials looking pretty good. XLC, XLY, or XLC, XLV. So communications, healthcare outperforming. Underperformers on the intraday: materials, industrials, discretionaries, tech, utilities, real estate, and staples. Okay. Interesting that we were seeing energies and financials doing pretty good here today. Let's go. I'm going to go check a look. Is how crude oil is doing. Crude oil's up. Crude oil's up. I saw some statistics that people got extremely bearish on after basically there was an OPEC meeting, right? This is looking at gasoline. Let me look at gasoline, heating oil. Okay, and I'll go back to crude oil. So, yeah, there was this big wicker, right? This was supposed to be around an OPEC meeting time. Basically, I don't think they were able to get production cuts agreed upon, or a lot of countries said they would look into it, right? It basically means we're not going to do crap. Anyways, it dropped off. A lot of people, like, there were some metrics basically saying like people were hugely bearish on oil, so it makes sense that we're getting to some rally here, and it might be longer lasting with how much bearishness was kind of out there. I was seeing on Twitter there was a lot of bearishness. So, yeah. I mean, we could definitely still go lower, but that was just too much bearishness. So it makes sense we're kind of rally here for a bit. All right. What else? Let's take a look at some of those big tech names. AAPL, yeah, AAPL had a pretty good gap down yesterday. Apparently, one of the issues why they had to stop selling iWatches or the watch device, they lost a patent case, and they have to come up with like a software fix because they lost this patent or something like that. I don't know. I don't fully understand all that. But that was kind of what kind of drove them to have to or pull sales of the iWatch, I guess. Anyways, or the Apple Watch. I forget what it's called, the iWatch or the Apple Watch. I forget. Anyways, down a little bit today. Kind of flat, not really doing a whole lot. Okay, Microsoft down about 0.25%, not really doing a whole lot. Alphabet, nice gap up here on Alphabet. Nice bullish day yesterday. Nice gap up today. Not really doing a whole lot intraday. What about Meta? Meta continuing to go higher. There you go. Amazon, not really doing a whole lot. Tesla's up 1.5%. Okay. One of the bigger news stories of yesterday that I I knew there was something else. I just couldn't remember what it was. But X, U.S. Steel, sold itself or agreed to a sell of 15 billion to a Japanese firm. U.S. Steel agrees to acquire Nippo Steel for 14 billion. Okay, 14 billion. So there you go. U.S. Steel will no longer be U.S. Steel whenever that gets approved. Now there was some people. I don't know. I think it was more of union people that were kind of hitting back, like, yeah, we don't want to agree to this sale. Yeah, well, we don't want to agree to your high steel prices. So it's kind of a difficult spot, man. Anyways, yeah, I think U.S. Steel will be going by, and it's really kind of an interesting one because U.S. Steel used to be one of the largest, if not at a time period, the largest company in the world back in like the 30s, 20s through the 50s. So, yep, U.S. Steel, no more. Which paves the way for Twitter, or the former Twitter, now X, to go public with the ticker symbol X. Hopefully, we will see that because I think that would maybe Elon Musk, conspired to have U.S. Steel bought out so that he can take X public with the ticker symbol X. I think that'd be funny. Anyways, there you go. That's kind of some rundown on what's going on. Now, I'm gonna run through this crazy scenario. Not really crazy. I one of the things that I have not really been big on is like crazy scenarios that lead to. I'm not really like a big conspiracy theorist or like the world's gonna burn kind of person. The markets just kind of ebb and flow. I like this flow that we've gotten over the past month and a half has been crazy. Even throughout this year has been nuts. So I want to kind of run through some things because definitely was paying attention to the student loan debt. There's some other things that kind of go along with it, and I think the stars and the holes align to where Q1, early Q2 of next year could be rather bearish. It can lead into probably the rest of the year. And I know some people have kind of hit it out like, yeah, you know what, expect first half of next year, especially like a lot of market strategists have been saying, like, expect the first half of next year to be kind of choppy. And I don't think they really fully understand how choppy this is going to be. So follow along with me, and let me just quickly kind of go through this. So the reverse repo market, this is a market that's kind of managed by the New York Fed. And basically, this is kind of how the totals have been going over the past really 6 months. This is not not too long. All the way back to June, it was sitting at $2 trillion or over $2 trillion. And, you can see now, like in November, we crossed under $1 trillion. And here in December, we are, rapidly, continuing to dwindle this balance. So what the reverse repo market is all of the, let me just Google this real quick. Reverse repo, there we go. What is reverse repo? There we go. So let me put it over here. A reverse what is a reverse repurchase? Good gosh, there's so many things moving. What is a reverse purchase agreement? A reverse purchase agreement or reverse repo is the sale of securities with agreement to repurchase them at a higher price at a specific future date. A reverse repo refers to the seller side of a repurchase agreement, RIP or RP, or repo. These transactions, which often occur between two banks, are essentially collateralized loans. The difference between the original price and the buyback price, along with the timing of the transaction, often overnight, equates to the interest paid by the seller to the buyer. The reverse repo is the final step in the repurchase agreement, closing the contract. Okay, so what's really kind of important to know here is the definition and really what they're used for. These are basically used for by banks with the Fed and the Treasury to kind of, hey, we don't have the capital to hold on our balance sheets, what we need to meet regulations, right? This is all about meeting regulations. So they go into this reverse repo. They say, hey, we need so much cash. Okay, we get the cash. The next day they kind of reverse out the transaction, and then they do this. And you can see here over the past 6 months, it's been hugely in decline. Now, if you continue on at this decline rate, you get to maybe like February, March, April, depends kind of how aggressive it gets. Now, I'm going to kind of pause there because it could get worse, and it could get worse very quickly. Now, one of the things that we've heard of why the market and the economy has been so bullish and held up so well throughout this year is the American consumer. While the rest of the world is kind of like burning, like, Europe, China, they're all kind of they're not making it through. Like, they're all kind of hurting. The American consumer. This is an article from Axios, and basically I just needed the headline, so I just kind of, and there's plenty of articles, but what I want you to notice is October 17th, 2023, right? This is back in mid-October. Americans can't and won't stop spending in 2023. Well, that's interesting. Okay, so they won't stop spending, and that was back in October. All right, so that's kind of neat. So we go forward one more month, November 13th. Consumer spending falls in October, according to new CNBC NRF retail monitoring tracking card transactions. Okay, so the other part I was going to say to this, I really kind of wanted to find, like, there was some, during some of these earnings calls, there were several earnings companies kind of saying that kind of closed, their books a little bit later than what the normal at the end of September was. And what several companies had kind of said was, we saw a pretty good drop there in October activity. So that was kind of interesting. It was kind of one of like, all right, what do you mean by you saw a significant drop? And that was just kind of all it was. It was just kind of like a bullet point. Some of these companies that kind of mentioned, and so it's kind of interesting. You go from October 17th, where the consumer won't stop spending, to November 13th, mid-November, the consumer spending fell. All right. So what kind of happened in October? Well, if you remember back a couple of months ago, the political parties were able to fight hard enough. I don't know, whatever you call it. But basically, the student loan delay or pause ended in October. Well, I guess it ended in October. You're supposed to start repaying in October. That aligns up with consumer spending falling in October, right? So check this out. Only 60% of student loan borrowers made payments when bills restarted. So fast forward another month, and now we can find out that only 60% paid in October. Right? In October. So what coincided and what lined up in October with consumer spending falling was the student loan borrowers had to start repaying their loans. So what is very interesting when you get into this is the 60% number. This is hugely bad. This is really bad. So I'm going to go into a little bit of accounting. Accounting. Kill me now. But this is basically an account receivable cycle indicator or account receivable aging illustration. I don't even know where I got this from, some website. But anyways, I just needed the line. The line, don't worry about the line like accuracy or whatever, but just understand we have dates, times of date, dates of service for delinquencies basically, or people how far behind they are on their paying their obligations, paying their debts or whatever. So basically, most people are within that 30-day, right? Most people pay their bills, they're on time. This is typically like 85%. Like it's like people are paying their bills, maybe even higher. 60 days, right? That's within the first 30 days. You get your credit card statement every 30 days, you pay your bill. Okay. 60 days. This is the big one. 60 days. After 60 days, basically it no longer is, you fail to pay your first month. Okay, I mean, stuff happens. Wife goes to the hospital. Oh yeah, I totally forgot to pay. Something happens in the family, travel, credit. Your maybe you change banks and you forgot to change auto draft. Whatever it is. Sometimes things happen. People slip past that first month. They fall into the second month. Okay, second month, you fall past that. It's big time. This starts to kind of hit your credit report. This kind of starts to get the agency, whoever holds the debt, whoever you're paying the debt to, they really start to look at you. They start to make calls. So who holds the debt and who are these people supposed to be paying the debt to, right? The 60%. Well, this is going to the Department of Education, right? Department of Education or the Treasury. I don't know who actually services the debt, but it's basically the federal government. So if you think that they are not going to be aggressively coming back and trying to get their money, they will. And one part that, if you don't know, is that they can seize your bank accounts and or take money straight out of your wages. So if it comes to that and if you're having to live off of even less, that is where it will be very difficult for people to continue to spend money that they don't have. Okay, so I'm not going to go down that rabbit hole, but what you kind of want to know is usually within the first 30 days, typically like 80-85%, and then it drops off. Most of the time, like with, in between 30 to 60, maybe like 10, and then after that's maybe like, the rest, 5%, 60 to 120, and after that's like the rest. And it drops off quite substantial because most people are within that 30 days. Most people. 60%. Like, I get it. That's still most. I get that. But 60% is not what is normally this number. This number is normally like 85% or higher. And then 60 days, in between that 30 to 60 days, this is like 10%. So this is going to be rather interesting to see really what winds up being this number when we get that next batch of data. Because after that, then you can start to really kind of figure out what the slope of the line is. The first month, people haven't paid student loans in years. So you kind of got to give some benefit of the doubt. There, might have been some confusion how to play. I saw some articles like there was some confusion how to pay or whatever. Like, okay, so you got to give them a little bit of benefit of the doubt. So you want to see really how many people pay here in between that 30 to 60 wind up falling in that window. Because if there is a lot of people that don't pay and this drops off to like single digits percentage that pay between that 30 to 60 day window, this will be a big deal on how far behind they are, because then it is going to be that many less people paying down the line, because it's not going to uptick, right? It doesn't uptick the further down the line of delinquency you go. It's typically like you start writing it off. Businesses start writing it off, okay? So what are people living off of? Credit cards, right? This is the credit card tracker put out by the Fed. Okay, total U.S. consumer credit card balance sheets in the U.S. And one of the things that you can kind of see here, here's the beginning. Hold on, a little too far back. Here is the beginning of beginning of 2023 right here. Okay, so throughout 2022, beginning of 2023, halfway through the year, you can see it's actually kind of going up in a pretty linear line. Like that line's kind of falling off. Here in the since late summer, it's kind of dropped off, or it didn't continue up at the same pace. And then we had a little bit of a downtick there, and let me just zoom in to that last little bit there. So we had a little bit of a downtick here at the end of October, and this little spike up here. This is Black Friday, right? That Black Friday week, so you get a lot of credit card balances always that week. Like every year, you can go look at like November, that last week of November that year, and you always see like a nice little spike there. So we are starting to see a little bit of a sluggishness. And the other thing I would say is if you're really hurting for money, or you're really hurting on cash, you're having to repay student loans. Well, what are you going to do for the holiday seasons? Well, you're going to still buy gifts, but you're going to go look for the best deals possible, which would coincide with that week, right? Black Friday week. So it's gonna be interesting when these, 60% of the student loan borrowers start having to repay, but it only winds up being like 70 to 80% are actually repaying. And we're not going to really know that here for like another month or two, which is why I'm saying like February, March, gonna be kind of interesting when we get to some of these kind of data points, because if people are just living by on credit, and they get down the line, and then these banks start to say, hey, yeah, you know what, you can't continue to live off credit, we're going to lower your credit limits. Then what are people going to do? And this is where you look at housing. What are the things that you want to pay for every day? Well, start the highest level. You want to pay for food, right? You got to pay for food because you got to live. After that, you're probably going to look to, if you got kids, you're going to take care of the kids. So those would be like 1A, 1B. And then after that, it's probably going to be your housing situation. Like that's the next bill you want to pay. And three of the biggest reasons why people aren't selling their homes, and this was from EAP, I believe Easy Agent Pro. Yeah, not really a big deal. I didn't really care to find this, but there's three reasons. This is like the one reason: rate concerns. A big reason why rate concerns, because you can't go buy a new house at a higher interest rate than the one you have, right? If you locked in and got a house at like 4%, and now interest rates are like 6-7%, even though they've come down over the past month and a half, that is still a huge difference between what you got. Okay, so all of that kind of being said, so all of that together, this is where I think the reverse repo market kind of comes into head and drops off and gets to like that zero line about that same time, out in like February, March, the same time these delinquencies on these student loans, right? And once you get out there, where those credit companies are going to start to feel it, and where is the consumer not going to spend is going to be the big deal when we get to February and March. That will be the one area of concern that I would have around that time period. And this is one that could probably continue to snowball throughout the year. Right? If people are paying their life, a lot of their livelihoods based on credit card balances, and their credit card balances continue to go higher, which normally during recessions, credit card balances do continue to go higher. This number does continue to go higher through like the recessionary time period, and then after the recessionary time period, you do usually get this drop off. Even back in, if you look at this data back in like 08 or whatnot, it'll look that way as well. So yeah, looking at 08, you see it kind of continues to go higher through this recession back into early 2009, and then it drops off. Even back in 2001, in that bear market, it kind of just stayed at least somewhat steady. It didn't really drop off all that much. So the point is, when we get to the end of Q1, beginning of Q2, that is where you're going to see a lot of these credit card companies start to change maybe credit limits, credit scores, and that kind of stuff. And people might not be able to live on credit as much anymore. And then that can spill over into the housing market. Because when you cannot pay your bills and you can't continue to live off of credit cards, one of the things you're going to have to do is probably look to sell your home. And that will probably be pretty tough because I'd imagine a lot of people would not be able to get maybe, I mean, at first you're probably going to be able to get, your equity out of it. After that, you might not be able to get your equity back out of it. And that's the part of, snowballing into a housing issue that would probably happen next year. I would imagine this probably does happen next year. So we'll see what happens, but this would all align kind of with credit card companies, also, versus repo kind of dropping off and getting down to that zero level. And if banks can't use the reverse repo market anymore to fund its capital, then it's going to start to really be strict. A lot of these banks will probably really tighten up their hold on how much credit they're allowing out there. They're going to be holding on to capital any way that they can. So that's just kind of one of the things I wanted to kind of go through. I think those two things, the reverse repo market and the 60% of student loan borrowers is, only making payments. I think the student loan part of it is hugely slept on, hasn't really been talked about as much. And this is something that is really kind of, I think, is really going to start to hurt the economy, because they're not going to spend money. They don't have the money to spend it, especially if you got to repay student loan bills. And if you just look around, I saw like 5 things on Twitter between last night and today about, the being able to afford a home doesn't make sense. Like the median income kind of equates to like a $250,000 home, but yet the median household or the median value of a house is like $450,000. It's like almost double. It's crazy. So something's kind of got to give, and I think taking all this capital out of the economy is probably going to be the one that winds up doing it. It doesn't happen right away, because the contracting forces are the financial system, and this is where we will see those contracting forces in February, in March, and probably see it continue to percolate throughout the year, especially if people aren't going out to spend money, then people are going to get laid off, which then that kind of it keeps the domino kind of going, right? It keeps that domino going. Like, people don't have any money to spend, so they're not going out to spend. We just saw that with that report from October. People are spending less, and now that people are spending less, well, layoffs will probably happen, or people won't be hiring. Therefore, people won't go spend more money because they'll be getting laid off, and so it just snowballs. It'll be a snowball that'll probably start to happen, I would imagine, in February. So that's just kind of all I want to say about that. Black Beauty, what's going on? How are you? what is it about Tesla? Tesla gave a trophy. Tesla, what is Tesla just kind of hanging out, man. Had a nice week last week. Tesla did really nice week. Hard to believe how many trading days we got left. So tomorrow will be the 20th. 1, 2, 3, 4. So 3, and then we get to next week. 2, 3, 4. Oh, we have 7 trading days left. And if I'm not mistaken, I believe Tuesday would be a half day. Maybe it's not. Maybe it won't be. But we are down to seeing Black Beauty's on at 7. 7, as they say in Russian. Sies. I think. I don't know. I don't speak Russian, but it's plausible. Man, next year. Whew. Next year's going to be a fun one. I think next year's going to be a fun one. Okay. Anything y'all want to look at? Let me know. Let's see what's going on. Major news: 2023 rally isn't just about 7 stocks anymore. Nope. Past month and a half proved the IWM has come to life. Let me take a look at that real quick. Q's IWM. It's still looking pretty good there. Let me check this out. So when I put this idea up, let's see, the Q's IWM was trading at 213. What is it at now? 216. This has 2.04. Why is it still up there? Hold on. Why is that? Why is that still like up at 2.16? That's. I also wish I could zoom in on this chart. I can't. Cause I think I posted it like right here. Because we got one little quick. I remember this week. I was like, oh, I should have waited a week to post that idea. I remember that. That's all right. Oh, what day was that? October 27th. There it is. Yeah, it was right there. October 27th. Which is right at that 213 level. I don't know why this is still saying, though, when I look at this, when I fast forward, or I say give me my recent time, I don't know why it's still. Maybe because it's giving me November, it's not giving me December, because it's on a monthly time frame. So I don't know. It's all right. That'll work out over years. It's gonna work out over the next few years. Let's see what else. What else is going on? Home builder stocks soar. Yeah, dude. I would look for a semi-aggressive opportunity on home builders to go bearish. I just kind of talked about why people can't afford shit, and they're not going to. Stocks step higher as rate cut hopes persist. Yeah, fair enough. Bulls got their way eventually, right? They got those. Actually, they haven't even gotten their way, but they definitely got the Fed to say, "Hey, we're looking at rate cuts now," and that was kind of been the bull case all along. Like, oh yeah, once we get to the Fed talking about rate cuts, but that's not going to be a good thing if they actually have to cut rates. Metaverse can make a comeback, and the metaverse, not Metaverse, the company, the metaverse can make a comeback in 2024. I want no part of it. A wave of tech lawsuits passed in 2023. Can companies keep up? Is there really anything else going on? Silver lining and U.S. steel takeover by Japan buyer. Goldman Sachs boost 2024 SP 500 target. I wouldn't boost any kind of bullishness for next year. Okay. I don't really see anything else. Yeah, not a whole lot kind of going on out there. I mean, there's pretty good amount, a little bit of green, cat, deer, GE, all looking pretty good. Let's take out those guys. Whoops. Wise, thank you. Cat, okay. I believe August was the yearly high. That was not just the yearly high, that was all-time highs. All right. Cat has made a crazy run here over the past week. That is ridiculous. Cat, deer. Am I missing something on cat? Like, are we in like some new industrial revolutionary boom? Like, is China really ordering a bunch of cat machinery? Am I missing something about cat? This doesn't make sense at all. I'm gonna check their earnings real quick. I mean, earnings look really good. Actually, did drop quarter over quarter, but definitely better than the forecast. I don't know why their forecast is so low, and they've definitely beat it the past 3 quarters. I'm kind of curious why their earnings are growing. Have definitely shot up here the past 3 quarters. I mean, the revenues definitely did not shoot up that much. Let me check something else. Yeah, I mean, even that quarter where earnings jumped quite a bit, their revenues actually declined. I don't know what's up with that, man. I don't know what's up with that. I think that's about all I got. I'll chop up that analysis I kind of looked at in the middle part of the hour. Make that another video. Put that out maybe tonight or tomorrow. And at Alpha Hunters, I mean, I wouldn't expect anything crazy on the markets at all. Probably just slowly grind higher. It'll be interesting to see if the SPY actually gets to all-time highs. You know, I doubt it'll happen this week, especially with how far ahead we are of the moving average here. But I mean, it could definitely happen next week. You know, so we'll take a look at that one next week on a short trading week. And I might not be on the mic next week just because there's not going to be much going on. But I don't know. I haven't really made that decision yet. I'll let you all know before the end of the week, though. Alpha Hunters, have a great rest of your day. Take care. We'll see what's going on tomorrow. Alrighty. Take care, Alpha Hunters.